Hey, Brian, thanks for taking out the time today to join us.
Yeah, thanks for having me here. I appreciate it.
Yeah, of course. So before we get into the interview, just like a normal podcast, could you tell us, our audience, a little bit about your background and also where you were to where you are today?
Oh man, what a stark difference that's going to be. So, when I first started in this business, I was 20 years old. This was 30 something years ago. I had no money, no experience, no knowledge of real estate, and no connections. Knew no one in the industry, and basically knew nothing. And decided that meant I had everything I needed to be successful. So I set out on a journey of investing in real estate that never stopped. And 30 years later, I went from that, broke 20-year-old with a dream to having acquired over $500 million in real estate, over 600 or 700 and something single family homes, over 3,000 apartment units. And I'm not done yet.
That's good. It's good that you still have that ambition to keep going. That's definitely one thing that's hard to keep up with, especially, the longer you're in something. So that's awesome that you have that fire still in you.
Yeah, I can't let go of it. Real estate's like a drug. Once you get addicted to it, it's really hard to pull away.
Yeah, I agree. Well, and I know quite a bit about it, your background. I've seen you speak before. I kind of want to go back to, because initially when you first started, it wasn't syndications. Now it is. Going back to those first 2 to 5 years or 2 to 7 years, really, what were you doing in the business at that point, and then how to evolve into syndication?
Well, I was still, working a W-2 job to pay the bills because real estate sure wasn't making me any money at that point. But I was buying, fixing up, and reselling houses. That was my main objective. And I was acquiring homes in foreclosure at the foreclosure auction, or at least trying to, and fixing them up and trying to make a profit. And it wasn't wildly successful, but it was an incredible learning experience. I really spent about 5 years following every house through the foreclosure process just to see what happened, what it ultimately sold for and what it was resold for by whoever bought it, and researched the title and did all that stuff just to teach myself the business. So really my first, 5 or 6 years was really just an educational experience more than anything else. And it was around that time when things finally started to take off and really started to become a lot more meaningful. It took me another 5 years though to be able to replace my income. So it's a slow slog, and anybody who says real estate is a get rich quick business is sorely mistaken.
So it's not an overnight success, I take it from you, from your experience.
To say the least. Yeah,
Yeah.
it was an overnight unsuccess. It's like everything that could go wrong did go wrong. And but that's what it's about. That's how you learn. I think that those kinds of things make you stronger. In fact, I was talking about this the other day, and it's like, you see some of these experiences, and they're really taxing on you when you're going through it. But if you think of it like you're that rubber band being pulled back, and it's as the further you get pulled back, the more you have a choice to make, whether the rubber band breaks or you let go. And when you let go, of course, what happens in a slingshot when you let go of the rubber band, right?
Yeah. Yeah. Well, so going back to doing flips and everything like that and going through the foreclosure process, did that really help you the first 2 to 3 years gravitate towards a system to put forth? So when you started doing because I know you did quite a bit of flips for a long time, those first 2, 3 years, were you building the system, or did it take a little while, you first researching that back end and then started building the system after you researched that back end?
Yeah, I started building the system from day one, and it was all about creating some method of doing what I was doing that made it simpler for me, and that meant the simpler I could make it, the more I could accomplish in less time. And so this started out where, first I made a typewritten form, literally on a typewriter. This is dates how long ago that was. And it was like I could fill in boxes on this typewritten form to research the title and the status of a foreclosure. And then ultimately, I created a electronic database that could keep track of everything, which ultimately morphed into like a full-on, almost enterprise-grade software system that I could use to follow, track every foreclosure, do all the title search work and everything. And it took several years to develop this, but kind of what was the most interesting part of the story is all this was happening during a time when there wasn't a lot of foreclosures out there. So I was really kind of, on one sense you say, well, you're spinning your wheels, you're putting all this work in and you're not really accomplishing any meaningful result. But again, it was that rubber band being pulled back, because all of a sudden when foreclosure started to ramp up, I was prepared. I had everything lined out. And after the great financial collapse back in 2008, 09, our business really took off, and we went from doing a dozen houses a year to doing over 100 houses a year. And I never could have accomplished that if I didn't have the systems, the back end, the software tools, the system, the processes, all that stuff in place. We were 100% ready for that event, and it was like flipping a light switch, and we instantly like 5x'd our business almost overnight.
Nice. So you say you've been in the business and you started about 30 plus years ago. So is this early mid 90s then, I take it?
Late 80s.
Late 80s. Oh, late 80s. Okay. And so late 80s, nothing really kind of happened until I want to say it was like 91 to like 94 is when some foreclosures and short sales and stuff like that kind of came about, right? Because I know that there was kind of a downturn right around the early 90s.
Yeah, I did some of my first flips in the early 90s. And that was when, I really started developing my systems, was in that volume spurt that we had in the early 90s. And then we didn't see much for a while. And then by late 90s, things started to pick up a bit more. I think it was about 98, 99. We started seeing a few more foreclosures, started ramping up the business, kind of kept that going until about 04. Things were kind of building up to like a couple dozen houses a year by 04. And then by that point, I looked at the market and it's like, what is going on? It's like people are paying crazy prices. That doesn't make sense at all. It's like all these loans where you don't have to have any income qualification. They used to call them the ninja loans: no income, no job, no assets, and you can still get a loan. And, when you started to see that, I just felt like there was going to be some weird correction in the real estate market. So really pulled back. 05, 06 did almost nothing.
Yeah.
And then 08, man, the waterfall started to turn on. And by 09, we were full bore at 100 something houses a year. So it was pretty incredible.
Yeah, you're not the only one that's told me that. I have a couple of investors down here in Southern California that I work with, and they said, like 05-ish, they were, everything stopped and everything really, they pulled back because they saw the writing on the wall. So you're not the first one to say that. How critical, like moving up to that point, I know you have your systems in place and stuff like that, but how critical was it for you to develop a team and be able to strategize with that team when you're, even before the crash?
Well, before I felt like I was the Lone Ranger. I wanted to do everything myself. I wanted 100% of everything and 100% control. And after the crash, I found that was so limiting. And I knew that I needed to get some additional resources if I was really going to be able to take advantage of what was happening in front of me. And so, just by stroke of luck, I met a partner who became my partner. He was a major home builder in town and was trying to figure out how to buy houses at the foreclosure auction. And we ran into each other at the auction. I'm like, what are you doing here? And it's like, oh, we're trying to figure out how to buy these foreclosures because we can't build houses and make a profit because the prices are falling. He's like, but I can't figure it out. And I said, yeah, well, I've got that part figured out. But what I can't figure out is how am I going to renovate all these houses, in such a short period of time. Of course, he had that down. So we partnered up, and he retooled his home building company to become a home renovation company. And we immediately grew to like 25 employees. We had a full team to renovate houses. And once I had that to kind of solve, the unsolved part that I couldn't figure out on my own, it was kind of like, 1 + 1 = 10. So
Yeah.
that it really underscored to me the importance of, bringing in partners that can add something to the equation that you don't bring for yourself.
Yeah. And well, so with your partner there, building that business, who was doing what? What were you doing versus him, especially like operations versus sales? What was kind of your guys' roles there?
Yeah, so my primary role was acquisitions, and just kind of running through what the business that I had already built and was already running, which was figuring out which houses were coming up on the auction block, how to which ones we wanted to bid on, how much we could pay, what the title condition looked like. So that was my role, and then his role, as soon as we bought the property, his switch flipped, and he got his crews out there and managed the overall construction strategy and renovation program. And then we hired a full sales team. We were both happened to be real estate brokers, so we brought in agents and had that team of agents doing our marketing and sales, and that pretty much took care of everything. And we just rinsed and repeat, and we did that about 600 times.
Yeah. So doing all this and running, with your partner, running that company and buying all those, were you buying some that were rentals as well at the same time, or was it just purely, active real estate as buying those flips and flipping them?
Yeah, in the beginning, we were just flipping. It wasn't time to buy to hold yet. The market was still unstable. We weren't quite exactly sure, that we had fully bottomed yet. And as it turned out, we were right. There was like a little double bottom that happened in 2009 and then again in 2011, because there was this first-time homebuyer tax credit caused a temporary bump in the market. So we were watching what was going on really closely in the market. And by 2011, we decided that it was really a true bottom in the market. And we then started shifting our strategy towards, in addition to the flips, we were buying rentals. So any house that made sense to hold for a rental because of, rent versus price ratios and that sort of thing, we would buy it. And any house that didn't make sense, we would flip it. So we ended up collecting a portfolio of about 120 single family rental homes in the San Francisco Bay Area at the very bottom of the market. I think we were all in on that stuff for about 15 million. Our thesis was it was going to double in value in 5 years, and we were wrong. It doubled and a half. And I think we ended up selling out of that whole package for around $45 million. So it's probably the greatest real estate trade I'll ever make in my career. It's one of those once in a lifetime opportunities that we'll probably never see again.
Well, that's huge. Congratulations on that. That's awesome. So, going back to that, I know that, 2008 to 2012 was, not normal. We don't go through, a lot of those throughout, history. There's only a select few that we can actually have any type of data points on. Speaking to, especially someone listening to this, or, just talking you and I, were there some things you learned in the late 80s, early 90s, and going into 2000, 2001, and then into 2008, where you prepared yourself, or you got prepared by systems or anything like that you can kind of share and say yeah, this kind of helped me prepare, or I knew and this was something was going to happen?
I think it was I think it really was just developing a bit of an intuition. When you watch the market go through various cycles, you kind of get a sense of what the market's doing and which direction things are going. And that really paid off for us, because we were able to tap into that intuition and make tactical decisions. In other words, is it time to ramp up the flipping business, or is it time to just wait a little while longer? Is it time to pivot to rentals? Has the market truly bottomed out? And a lot of that was just, having kind of seen the warning signs before, really made a difference in our ability to predict what was happening then. And that really was probably the greatest asset we could have, is just experience and that knowledge of kind of been there, done that.
Yeah. It sounds like a lot of your, a lot of systems and a lot of your business was you built on, just experience and just, grit essentially. Did you
Yeah.
have, I mean, especially going through what you did and especially building that system for a long time and then starting to implement it, going through it, did you have anybody that, helped you through that process or at least, help guide you through a couple of, systems, what they did to put them into a position to be successful?
The only guidance I got was from whoever wrote the Microsoft Excel manual that was about 4 inches thick that I read cover to cover, and and the same one for Microsoft Access and Visual Basic, and just kind of learned how to do my own programming. And I kind of felt like, there was nobody, there weren't a lot of people that do what I did, which was buying houses at foreclosure auction. There was a small handful of people, and at least in the counties where we were. And, they were at the auction with like a briefcase full of manila folders and papers flying everywhere and, and all that kind of stuff. So that was no help. And they weren't going to help out somebody that was competing against them anyway. So, I just knew like nobody knows what I need better than I do. So I'm going to build it myself. And that was the approach that I took. And it was, very draining, and it's a lot of work to do that and very distracting. Instead of investing in real estate, I'm programming and just doing stuff like that. But, it probably caused me to get a slower start than I otherwise could have. But I'm actually kind of grateful for that, because if I would have had a faster start, I probably would have accumulated more real estate for myself before the crash, which would have, wiped me out during the crash. And, I managed to survive that crash in part because my exposure, while significant and very painful, wasn't unrecoverable. And I think that made a huge difference. And, it's funny, in life, you go through all these different things where, there's obstacles and speed bumps and all this other kind of stuff. But, in retrospect, I wouldn't change a thing.
Yeah, that's awesome to hear, especially, when you talk to someone, not even just in real estate, going through a hard, PhD program or something like that, you talk to them and when they're in it, right, it's just like, man, this is the worst. But then like looking back, there's so many nuggets going through that process and going through that situation. They wouldn't change it, and they wouldn't change, just like you said, that, you learned a lot and you were able to apply a lot of those fundamentals later down the road in real estate. And it puts you in a better position than unfortunately some other people. So that's huge. And kind of going from now, what the market was and what you guys were doing there to transitioning. We'll talk about what happened last year and stuff like that and where we're at today in a little bit, but kind of walk us through, 2012 to about 2019. How was that transition from, doing flips? And I know you're doing syndication now, and we'll get on that subject too. Where are you guys at today? Like, where was that transition? Why'd you change from doing flips and saying like, hey, screw this, I'm going to continue to do flips the rest of my life, or I want to do something bigger. I want to change the operation?
Well, one thing about real estate is that, the market is a living, breathing thing. And you can't even saying the words, the market is almost a red herring, because there's so many different dynamics going on out there that you have to be a little bit agile and nimble to survive in this business. And you got to be ready to pivot your strategy as the market conditions warrant, if you really want to be successful. Now, early on in my career, I was flipping, and there wasn't really a lot of opportunity in flipping, but what else did I know? I didn't know how to do anything else anyway. So I just kept after it and didn't make a lot of money in the early years. But boy, when that business model really came into its own, it was an incredible business. And then you get a taste for, okay, when you're successful, that actually feels really good. So I'd rather continue to feel good and continue to be successful, which means now I have to look ahead to what's going to be a strategy that works from here forward. And so when we were sitting in that, kind of 2012-ish period, it's like, okay, this is really, really good right now. We're getting tons of flips, but we're buying all our stuff at foreclosure, and eventually all these foreclosures are going to be gone. And then what are we going to do? Are we going to be like write letters to owners and send them postcards and try to get them to sell their house at discount? I mean, that's never going to happen when the market is strong. Yeah. And they could just list their house and sell it in 5 minutes with 15 offers going, 10% over asking price.
Yeah.
So if that's not going to work, what will work? And couple that with a problem that we created for ourselves was, in order to scale this business of house flipping into the size that we did, we started raising money from investors to fund those acquisitions. So that in and of itself was a syndication. It was a fund syndication, but it was a syndication nonetheless. And we'd begun to build a huge following of investors who really trusted us and believed in our business model and were investing a lot of money with us and telling their friends, and that investor base was building. And it's like, what are we going to do when all this is gone? Are we going to just send them all their money back and say, hey, that was a good ride, thanks very much, and throw away all this hard work and time that it took to build all this trust? Or are we going to find a new strategy where we can say, hey, that was a good run, here's what we're doing next, and if you want to invest in that, we'll tell you about that vehicle. And that's the route that we took. And in doing this analysis, our feeling was multifamily was going to be the way to go. We knew residential real estate inside and out. So going into commercial strip centers and shopping malls and hotels and all that kind of stuff was just way outside the box. We knew residential real estate. So what could we do in residential real estate that's scalable? Simple, large multifamily. I had already had experience in this field when I began in actually 2002 or 3. I bought my first multifamily property and bought a couple more since then. So I was familiar with the business. I'd done some coursework on it and felt that it was time to make that strategy shift, because that's exactly what the market was telling us to do.
Well, so that's kind of how you won in 2008 to 2012, is thinking outside granted, there was a lot of years to build up to that, but you were thinking outside the box prior to that even happening. And now, transitioning into buying multifamily, that was the same thing, the same, thought process. So I believe that, and I've seen a lot of your work, and I've heard a lot of, like I said, I've heard you speak and stuff like that. I think you're a real big innovator in the space, because you've done a lot of things like this, and you've been able to pivot even before anybody's saying, hey, maybe we should pivot. And you do that, and you're able to do that quite gracefully, for sure. So talk to us a little bit about, your current syndication. You guys are buying multifamily. Have you guys transitioned at all to any other asset class, or is it just specifically multifamily? And have you guys stuck with that since you started?
Yeah, we're strictly multifamily. I've, in the 30 something years I've been doing this, I've had the opportunity to dip my toe into just about every asset class out there. I've owned mobile homes. I've built a self-storage facility from the ground up. I've subdivided land, and I've built houses. I've done just about everything there is to do in real estate. I developed a lakeside hotel. All kinds of different stuff. So I feel like I kind of got, I've been there, done that, and got the t-shirt on real estate development and pretty much every sector of this business. And what I found through all that experimentation was I'm a lot better at commercial residential real estate than I am in any other sector. I'm better at fixing things up than ground up. And so that's the box I stick to. And, if I stray too far outside of my box, I tend to get my hand slapped. So it sets me back on that same course. And I also believe in trying things, trying and experimenting on new things with my own money, my own resources, or my own grit, and proving that I can do it and do it successfully before I bring investors into the fray and have them put their money at risk. And so I guess by trying out all these different sectors and not having a wild success in any of them, it was a good thing because I kept my investors insulated from those experiments, and I found which ones I really was good at, stuck to that, and grew our business through investors in those core competencies. And I think that's one of the things that's led me to now having raised over $200 million from investors and having never lost a nickel of principal in over 30 years for those investors. And it comes from just proving out the model before you take the money.
I mean, huge takeaways from there. The biggest one is, what have you guys done to set yourself apart, especially with, I would say, the last 4 to 5 years, and you could probably speak to this better than I, but the last 4 to 5 years, it seems like multifamily has blown up. A lot of people, and there's a lot of other asset classes that have, but how have you guys stuck out and been able to win those deals versus someone else that comes along to try to get that property that you're looking at?
Well, I think the biggest change to my business, again, goes back to a conversation we had a few minutes ago about partners and bringing in the right people. And about 4 or 5 years ago, I got introduced to some heavy hitters in the multifamily industry that were working for household name institutional shops as C-suite executives, and kind of knew each other as friendly competitors over the years in business out there, competing against one another for various portfolios of properties, hundreds of millions of dollars type stuff. And they wanted a more entrepreneurial lifestyle and to get out of, the corporate rat race, so to speak. And I just got lucky, and I managed to be able to bring these 3 guys into this business and bring with them over 100,000 units of experience in multifamily, which is literally unheard of out there in the industry. You don't very often hear of a company that has principal executives with combined 100,000 units of experience. And we do, and I'm very thankful for that, but that really is what set us apart from a lot of other buyers. And so when you're talking to a seller or a broker and they see like, okay, where you guys came from and what you guys have done, it changes the nature of the conversation when they're making decisions on who they're going to select as a buyer. But it also changes the conversation of, our interaction with our investors and the trust that they place in us because we have this depth of experience. And I mean, we're talking about careers that go back as long as 40 years in this business. And to be able to have seen those market cycles, experienced those market cycles, and survive through those market cycles is an enormous value add for a passive investor these days. And and every year that goes by, it's a rarer and rarer finding because, all these other shops are starting up with people who have never lived through or survived a market cycle. And those who have are increasingly going into retirement. So to us, that really sets us apart from, the other competition out there.
Yeah, that's huge. A trend that I continue to hear, with you is building the resume, even though, you're not really. And 2 different examples is, you're building your resume, not knowing it, well, most likely you knew it, but building your strategies and how your system was working early days. And then now when you got into multifamily, you built your resume through, especially what you were able to exit, with flipping homes into what you were doing in multifamily. So people saw that and they were able to come, and bring their skills forth with you. And, you were able to collectively go and be really the best marketer out there on picking up multifamily because you had all that backing of experience and everything else. How did they come to you and how did they trust you in that transition coming from where they were to now your company?
Beats the hell out of me. I wish I could tell you. It's weird. The one, all of a sudden I get a phone call out of the blue. Wasn't seeking this out. I got a phone call out of the blue, and the guy says, so-and-so, who's a friend of mine, said that happens to be a friend of his, and said that we should talk. And that was about all I knew. And I'm like, all right. So we ended up in a conversation, and one thing led to another. And then it took about almost a year of, discussion and, kind of goal setting and kind of like courtship, so to speak, followed by contract negotiation and that sort of stuff to get to that point where, we had a business. So it's just weird how life happens. I mean, people get introduced into your life that come from directions that you would never imagine. And, you just never know what one thing is going to lead to. And that was a prime example of that. And I could give you so many examples of how, chance and meetings or chance events just really set your business up for that next phase of growth. And, this is probably the best example I could quote of all of them.
Yeah. Yeah, that's huge. So just real quick, so we don't breeze over it. I know some people may not know what a syndication is. Just for, the audience, can you give a little feedback on what a syndication is?
Yeah, a syndication is just simply a group investment, essentially, where someone such as myself, for example, or any syndication sponsor is what they're called, gets a group of investors to pool their money together into one investment vehicle to then turn around under the direction of the sponsor to acquire one real estate asset. So in other words, or a number of real estate assets. So in other words, I go out, I want to buy an apartment complex, and it's $30 million. And so I need to get $20 million from the bank, and I need to get $10 million from investors. And so as the sponsor, I arrange for the financing. I go out to our client base of investors. I create an entity. Those investors invest into the entity, and then I turn around and use the $10 million I raised for the investors as the equity check that acquires that real estate. And then I operate it, run it, and then ultimately sell it, and then send the investors their money back plus their share of the profits. So it's just basically, think of it like mutual fund investing. You invest money into a mutual fund. The fund manager chooses the stocks, buys the stocks, manages the stocks, and then when you're done, you cash out. It's kind of similar to that.
Nice. And you guys aren't doing any flipping now. It's all focused on multifamily.
It's as I said, real estate's a drug, Peter. And once you start getting some, you just can't get out of it. So yeah, we're still doing some house flipping, actually.
Oh, yeah.
Well, it's funny when you build up a big business like this, you get people in various roles that become nearly autonomous and, can run essentially their whole corner of the world without a lot of input. And so we, and having done several hundred houses, we have a great team that was doing a great job. And even though there's not much for them to do and that team has shrunk dramatically, we still have a few folks left who are running our house flipping side. And it's been successful. We're not doing a lot, gosh, we were doing hundreds a year, and now we're probably doing, I can probably count them on my fingers, the number that we're doing in a year, but it keeps the dream alive. You never know when that strategy is going to come back, and we want to be ready to pounce on it when and if it does.
Yeah, that's huge. So that team, basically same members, but it just shrunk a little bit. How crucial, especially, and I'm going to hit on these team analogies again, but going back to, building your team and stuff like that. I know you mentioned in your book, building a team and having a team that's set forth that obviously has a lot of an experience and stuff like that. Outside of, kind of the nuggets you gave us, how crucial has it been to build that team and have those relationships with the people that are actually doing the flips, been very beneficial to you over the years? And have they been there since, day one, since you built the business with your partner back in 08, 9, 10?
Yeah, I mean, I have some people on my flip team that were there from before that time even. I've got, one person still on my flip team that started with me in probably around 03 or 04 and is still with me. So going on now, I think she's my longest term employee. And then after we built the larger flip team and then, scaled that way back, we made it up to about 25 people on that side of the business, but now we've got 3 left. Okay. And that's all it takes. The other people, a lot of those people were involved in construction, now we sub that out. But on the acquisition side, it doesn't take a lot of people. And, and that side of the business doesn't make probably any more money than it takes to maybe support those people that are on staff. Yeah. But that's okay. They're good people and they've been with me forever. And eventually that strategy is going to come back and they're going to get really busy. And if I can retain that talent during the interim, then I'm going to try to do that. And we've been successful at doing that. So those relationships have been enormously important. And that's why they're still here, is because they're so important that even when the strategy wanes, I don't want to see them go.
Yeah. No, that's awesome to hear. So let's go back to, I was going to mention earlier, and I wanted to cover it last year. I know last year was, especially this time last year was really, there's a lot of unknowns. What were you guys doing back then with syndication? Were you guys holding tight to see what happens? And then how did
that
later in the year last year?
Yeah. Interesting year last year, that's for sure. We were in the middle of trying to buy some apartments last year. We were in the middle of selling some apartments last year when COVID hit and kind of changed the course of investing for the short term, at least. And it turned out it really didn't change much for very long. We closed our last sale in Houston, Texas on March 20th of last year. So it was literally like the week the world turned, we closed. And it's kind of felt like we, ran out and the door slammed right behind us as we were getting out. Building collapsed right before we left the burning building. I don't know how you want to, what analogy you want to use for it, but I felt like we barely made it out. So that worked out. But then we had another deal that we were selling that was, we just had our best and final offer round that same week when everybody was put on to stay-at-home orders. And that put the brakes on that transaction. Everybody kind of wanted to step back, wasn't sure what was going to happen. And the transaction essentially fell apart. At the same time, we were out there trying to buy stuff, and we were like, I don't know what direction the market's going to go. So I really pulled back on our underwriting criteria and guidelines. And of course, then we were just non-competitive at that point, and there wasn't a lot out there anyway. Sellers wanted to put their properties on the market. They were too scared that they weren't going to get the pricing that they wanted. Yeah. So there was this weird standoff. And it was kind of the funniest thing because, it's like, I was like, this is the most two-faced I've ever been in my life, because I would literally get on the phone with the broker that's selling our property and be like, what do you mean? I mean, we're still collecting the same amount of income. In fact, income is up from last month. The pricing shouldn't change. And then I'd hang up the phone and call the next broker that we're trying to buy a property. And it's like, well, rent growth isn't going to be here anymore. And, there's going to be a lot of rent defaults. And, and it was kind of the craziest thing. And so I could see from both sides how there was this total standoff between buyers and sellers, and they could not get on the same page. And as both a buyer and seller, I couldn't get on the same page with myself. So it was a really strange time. And what had happened is just all transaction velocity just ground to a halt. I mean, nobody was doing anything. And that lasted until, July or August or so. And then people started to figure out hey, the world still turns. And we're actually collecting rents. We're hitting month over month collection highs and all that kind of stuff. Then suddenly the buyer on our transaction we were selling resurfaces and wants to reinstate his offer. And so that transaction is back on. And then, we're out and making offers and eventually, we closed the deal in December, and then we closed another one in February. And, we're back on. The switch is flipped.
Nice. Well, I remember experiencing the same thing. It was kind of a standoff for a few months, and then everybody was like, No, I think we can still do this. So let's continue on, and then it just picked up from there. Uh, Looking at interest rates, I know they've dropped dramatically. What has that done for your guys' syndication business? Has that really helped it and boosted it?
No, it hasn't done anything. Interest rate movement doesn't really affect us much because when interest rates go down, prices go up and your returns are still the same. When interest rates go up and pricing comes down, and then your returns are still the same. So it just doesn't matter. I mean, there's all these things are always moving, right? There's rent growth is changing, interest rates are changing, borrowing costs and all sorts of different stuff is always in flux. The one elasticity in this whole thing is price. And so, I used to say, like last year when COVID came out and people were like, well, can we buy anything with all this COVID and everything else? It's like, well, we can. We just have to buy at a lower price to produce the same return because now we're not going to get the rent growth. Well, guess what? Now we're seeing the rent growth is here.
Yeah.
The rent growth never left. We're still seeing rent growth. So now, okay, that's swung the price back up because now we're seeing rent growth again. So, the interest rates really didn't affect us much.
Okay. And then what about like forbearance, and then also for people not paying rent? Have you guys been affected by at least no evictions and the moratorium?
Yeah, it's funny. They say that rent collections have suffered due to COVID, and the reality is they haven't suffered due to COVID. They've suffered due to governmental reaction to COVID and the policies that have been put in place in their efforts to appear as though they're doing something to help people. Have been what's been most impactful. And the eviction moratoriums have emboldened a few people to exploit the loopholes in the system and decide that they're just going to sit back and not pay rent purposely. Even though they're still working or collecting massive unemployment checks, they're choosing to not pay rent. And that's been, probably the biggest impact that we've seen as a result of all of the events over the last 13, 14 months has been that one thing. If they had not done that, then I think things would be a lot different right now in terms of people's willingness to pay. There's a disconnect between their ability to pay and their willingness to pay. And we have sympathy for people who have a difficulty with an ability to pay as a result of job losses and things that have happened over the course of the last year. And we've done a lot of things to help those people, a lot of things. But then you have the people that just want to exploit the rules and they just don't have a willingness to pay. And, we have a lack of tolerance for that. But unfortunately, our only mechanism that we have to display that lack of tolerance has been stripped from us. We can't force them to leave. So that's been a major impact at some properties. And it's strange. We have this one property the other day. I asked for a delinquency report. It was the 11th of the month, and we had 9 cents of outstanding unpaid rent on a 200-unit property. 9 cents.
Yeah.
And then we've got another property where 20% of the people aren't paying. And, and there's no correlation between why those two factors are true. Yeah. But it is. And it's a really strange time right now. And it'll be nice to see us get back to a world where we have recourse against people's lack of willingness to uphold their end of a contract. I think that's going to bring the world back to a bit of normalcy.
Yeah, I agree with that for sure. So you spent all this time, building the syndication and, obviously building a great business. You wrote The Hands-Off Real Estate Investor, right?
The Hands-Off Investor, yes.
Yeah.
Yep.
So I'm halfway through it. It's been really good. It's been a good read. Talk a little bit about writing the book. Was it something that, you've had a lot of grit, you've gone through a lot. Has it been something, or did you think that it was going to be as hard as it was, or was it easier than you thought?
Oh, it was way harder.
Yeah.
But the fact that you're halfway through it and still reading it is motivation for me to say that I'm glad I did it, I guess, because you're still going. You could say, yeah, I got a quarter of the way through and I don't know where that book is anymore.
No. It's a good book.
So that's a good start. So, it was a lot harder than I thought. It was funny. I don't know if you know who Brandon Turner is. He's the host of the Bigger Pockets podcast, and he's famous for like saying stuff like, I'm going to show you how to do 3 easy ways to do blah blah blah. Well, I was he and I were having lunch one day, and I was asking about all the books he's written. I'm like, I don't have any idea how you find the time to do it. He goes, oh, it's easy. This is all you got to do. Do this, this, and this. So I thought, oh, wow, I actually could do that. So I set out on that path. And then I realized, oh, man, this is a lot harder. It turned out to be almost a full-time job for 9 months to write that book. I didn't realize until after I was done, though, that it's 350 pages. And when I look at other books out there and how long they are, I'm like, oh, my gosh, this actually is like writing 2 books. So maybe that's why I felt like I worked so hard.
Well, yeah. I mean, and there's a lot of information packed in there. It's not like you're, repeating everything. It's very in depth on what you do and what you built. So it's enlightening on what you need to do, especially as a syndicator and everything like that. So it's a wealth of knowledge. So I could see why it's taken it took you 9 months to build that up into 350 pages. You probably could have wrote a lot more, and you just had to cut it down a little bit because you're like, okay, yeah, I think this is you probably cut it down after a while and was like, okay, this is directly to the point.
I did. Yeah. It was probably 400 pages when I finished the first manuscript. And then, we definitely cut it down to get rid of a lot of superfluous words just to try to make it as efficient as possible. Because you're right, there's a ton of information cram packed in there. And that's just my personality. I don't like to do anything half-ass. If I'm going to do something, I'm going to go all the way. And I didn't want this book to be like, oh, here, I'm going to tell you, 10% of what you need to know. And if you want to know the other 90%, you can sign up for my $15,000 weekend boot camp. It's not like that. It's like, I'm going to tell you everything I got. It's a total brain dump. Here's everything you need to know to passively invest in real estate. And this book was written for the passive investor to learn what to look for when they want to invest in a real estate syndication. It wasn't written for, the you and me's of the world who are actually out there trying to raise money, but it has that side benefit, right? For the people who are raising money, it definitely gives you some insight into what you should be thinking about, because this is going to tell your investors what they should be thinking about. And anything that your investor is thinking about is definitely something you should be thinking about.
Yeah. Going through the book, it's a lot, because you have to really wrap your head around it, and especially if you're not really used to, what the syndicator has to think about to invest in a property, all the other things and that are on the back end that people really don't think. That it's like, hey, I'll shove 50 grand over here. I'll shove, $150,000 over here. And it's not just that, granted, that's a lot of money for, a lot of people. However, there's a lot more that goes into it, and it, you dive into it and it really opens up, my eyes and opens up other people's eyes when they read it as, okay, this is the landscape of what I'm looking at, if I'm a syndicator. So this is where I should put my money, because this person is doing, the due diligence for me, and they're also, they have my back.
Yeah, then I can say mission accomplished, because that was exactly my goal, was to be able to, to elevate the whole industry, right? I mean, there's been a lot of this industry is somewhat of a black box where people are investing money and they don't really know what's going on behind the scenes. And really, if you're going to put your hard-earned income into an investment, you darn well need to know what's going on behind the scenes if you ever hope to see that money again. And so I guess, like I said, mission accomplished. That was my goal, was to bring that awareness to people so they could really understand what it was all about.
Well, cool. Well, thanks for writing that too, especially, how busy you are already, being able to write that book is huge. So we'll transition outside of that book. Is there a book that you've read in the past 24 months that's really helped you out and kind of made you think a little bit differently?
Well, I'm glad you gave me 24 months, because
Yeah, I just want to impact like something that like could be tangible today.
Yeah, because after spending 9 months writing a book, imagine how much time I had to read one.
Yeah, that's true.
So it's funny. I haven't read a real estate book or a business book since before I wrote this book. I had to clear my head and get out of that. So I've been reading, books of aviation, weather, and stuff like that because I'm more into my hobbies right now on reading. So had to get away from all that business book stuff for a while. So it definitely has been some time. I'll give you two of them come to mind that I've read. You're going to have to give me more than 24 months. Okay. I'm going to call it 5 years.
I'll loosen it up.
Loosen it up. Give me 5 years.
Yeah.
But two of them come to mind that I really liked for what I do that I thought was really interesting. One of them was called "Real Leaders Don't Do PowerPoint," and it was an interesting book on public speaking and delivering your message and not bogging people down with slides full of bullet points. I do a lot of public speaking, as part of this, business and part of our outreach. And, it's always good to do better for people and keep your audience engaged and make it more interesting. And the other book is actually along the same line. The book was called TED Talks, and it was written by the CEO of the TED Talk organization, and talked a lot about presentation style and, and engaging your audience and things like that, which was a really super interesting book. So those are probably my two most recent, and the two I've enjoyed the most in the last few years.
Okay, cool. And what about, with as big as business as you run and, anything that's really helped you along your path to get where you are today? Is there a software? Is there an online tool that's helped you and helped your business?
Well, the ones that have helped us the most have been the ones I developed myself. There's been no tool that we use more frequently than our own internally developed software tools. We use them on a daily basis. But look, I've been doing this a long time. So the one that really changed the game for me the most was the internet. And if you can believe, yes, I've been investing in real estate longer than the internet has been a thing.
Yeah. Well, yeah. I mean, especially with, you going through the whole process of the foreclosure process, you're probably going down, going through the county records office and stuff like that, where it's changed the landscape where you can do it, remotely on your computer. So,
oh yeah, absolutely. I used to spend 1 day a week in the county recorder's office, sitting at a workstation, pulling up documents and entering into my laptop. I used to do that every single week, and I did it for years. But yes, now I can just pull them right up here on my desktop, wherever I'm at, on the beach, on my laptop. I can do it from anywhere. And the advent of the internet has been the biggest change to my business. I mean, now people take it for granted. They're like, there was a lifetime without internet. It's like me thinking about my grandmother riding a horse and buggy to school. I'm like, there was a time there wasn't cars.
Yeah, exactly. Good analogy. Yeah, it's definitely helped out the game. My experience has always been with the internet, but it's definitely helped out with, people that I talk to like yourself that, going down to the county recorders for 2, 3, 4 days at a time and trying to pull all those records is cumbersome, to say the least.
It sure is. I'm glad I don't have to do that anymore.
Yeah. Well, Brian, where can people find out more about you?
The best place is on our website. It's praxcap.com, praxcap.com. You can find me on Instagram at Investor Brian Burke. You can find me on biggerpockets.com answering questions in their Q&A forums. Or, of course, you could check out the Hands Off Investor, which is available either on Amazon or at biggerpockets.com/syndication book.
Nice. Perfect. And then I'll put those in the show notes too, so everybody can check those out as well and make it easy to link up. So thank you so much, Brian, for coming on the show. It was definitely insightful and, just like your book, your wealth of knowledge.
It's great to be here, Peter. Thanks for the invite.
Yeah, of course. Have a good day.
You too.